Hi, this is Robert Houston. I want to welcome you back to the channel. Thanks very much for watching. Appreciate it. We've got a lot of members and viewers that have been asking me about diversification. And so one of the things that I wanted to touch on today is near and dear to my heart, and that is diversification. The fact of the matter is, a lot of people in real estate don't do this enough. They talk about it, they think they're doing it, but I really don't believe that most real estate investors are doing this in an adequate fashion. And one of the things that people also want in real estate is scale. And that is hard to get with diversification. There's a limited number of resources from a capital perspective that you have, and there is limited bandwidth that you can have, especially in markets that are far-flung from where you normally are residing. But there are multiple strategies, there are multiple ways to get diversification in your real estate investments. The first one is product type. Now, that one can be fairly easy no matter where you are. If you live in one city, you can invest in apartment complexes, you can invest in residential houses, you can invest in self-storage, you can invest in office buildings, in retail, in hospitality, you name it. All the different product types that you are interested in, you will likely have that opportunity to invest in those types of properties in your given market. I think that is a smart move to go, and I think it's also smart to go one step further, which is step number 2, geography. A lot of people also only want to focus on their market, and I'm not even talking state at this point. That can be just in the same city. People may want to have complete access and invest only in the market where they are typically investing in. And one of the things that does is it limits you. If there is a downturn in your market, the issue that you have is no matter how many product types that you're invested in, a broader economic downturn can have that same impact in the same city on all the different product types. And so I would recommend that you do both product type diversification and geographic diversification as a combined effort. Right now, I'm invested in approximately 20 different states in the United States and also in 5 countries on 3 continents. So we invest in the Americas, North America, Central America, and South America. We also invest in Europe. And in the past, we've done deals in Asia, although we don't own anything in Asia at this point. And I've invested in Australia, although we divested of something last year. So in 2019, we divested in Australia of our asset there. And from a geography standpoint, one of the things I look at is investing in markets that are very strong. I also like markets that I have a need to travel to or that I have a desire to travel to. And that's how I do my geographic investing. It's really not willy-nilly, not every deal is a good deal. It's really based on those 3 functions: strong market, need to travel there, or desire to travel there. And on the third point, diversification with sponsor. My big point to everybody in the real estate game is you cannot be an expert in every single area of real estate investing. It's just impossible. That's my take. You get spread too thin, you're in too many different product types, you are all over the place, unless you have a big staff. But if you're a small group or even an individual, the better way to do it is get very focused on 1 or 2 different product types and geographies that you like a lot, and then build up your contact database of sponsors that you know, like, and trust. And then be willing to co-invest with them, and oftentimes they will also co-invest with you when you build up the story and the track record and the knowledge and know-how in your product types and geographies. So I have co-invested with a number of sponsors in the past, people who were my clients, people who were my friends, people who I know, like, and trust, and they've also co-invested in the deals that I've presented to them. It is a win-win for everybody, because for me, I may understand self-storage deals, but I don't have the team to manage self-storage. So I will invest with people that I know, like, and trust who are very good in the self-storage space. So why do I need to go elsewhere? On that note, the best ways to find sponsors will be captured in another video. There are ways to increase your contacts with various sponsors, and it's not difficult. It's just getting a feel for the different types of deals that they're doing, understanding their processes, their rationale, and their thinking on the real estate market. But one good thing about having multiple sponsors is oftentimes they will be focused on a particular market and or particular product types. And if you can align yourself with the product types and the markets that you are not in, but you have a rapport with these sponsors, you can do very well on a passive basis with these other sponsors, either through your self-directed retirement accounts, your corporate accounts, or your personal extra capital accounts, your investment accounts that you may want to use with them. The fourth point that we have related to diversification is currencies. And I know for a fact a lot of people in the United States, actually a lot of my clients, a lot of my friends, family, they think I'm crazy for investing in foreign countries. Yes, there's a little more complexity. Yes, the debt's not as readily available, but you can invest in some really strong markets outside of the US that are very diverse and very different from the markets that we are typically in the United States. You can also invest in a lot of the same product types, and it's not that challenging to understand them if you have a desire. And I say if you have a desire. From a foreign investing perspective, I only invest in the countries and the markets, for that matter, that I've started to understand really well. I really like going to these places, and I either have a reason to go or just a desire to return. And some markets that I really like going to as a tourist, there's no way I will invest in as an investor, and I will continue traveling there because I love the market, but there's no way I would invest in the real estate in that market. There's some markets where I may not go very often, but I like the market a lot. I think the fundamentals are very good, and I will invest in those markets even if I'm only going to go to that country once every 5 years or so. So those are the points on diversification. I know a lot of you are not focused on diversification from a real estate perspective. You may think you are, but I would advise you, please look at diversification because it is important. It's important to your long-term investing goals. It is important for your long-term wealth building, and you can increase your cash flow in a multitude of ways. I really want to thank you for being here today and watching this video on diversification. Hope it adds some value for you in your real estate investing career. And if you have any friends or family who you think might enjoy this video as well and who could benefit from watching it, feel free to share that with them as well. As always, until next time, happy investing, and let's continue growing our cash flow and net worth together. Thank you.